Welcome everyone to today's webinar on the NPP and the new PayTo. Thank you for joining us. My name is Leanne Harris and I'll be your MC this morning. I'm the Deputy Chair of the SAM Network and the General Manager at Laboratories Credit Union. I'd like to start our event by acknowledging the traditional custodians of country throughout Australia and their connections to land, sea and community. We pay our respects to their elders past and present and extend that respect to all Aboriginal and Torres Strait Islander peoples today. As I mentioned, today's webinar is on NPP and PayTo, which will be introduced in 2022. Cuscal is one of the 14 founders of the new payments platform, and they've been working with the platform to provide innovative and reliable payment solutions. So just as a bit of housekeeping, you should have received a copy of today's presentation, which will be helpful if you're joining us by phone. We're recording the webinar and it will be made available after we finish today. We will also email you a link to a short feedback survey. We encourage you to give us your feedback to help us plan for future events. We've allowed time at the end of the presentation for Ben and Nathan to answer some questions. So please add your questions to the Q&A section. So I'd like to introduce our speakers for today. We'll be joined first by Ben Vivoda. Ben recently joined Cuscal as the Head of Client Services. He has over 25 years of experience in the technology and financial services industries, and he's held senior roles with several global organisations, including Fiserv and HP. Ben will then pass over to our second speaker today, Nathan Churchward. Many of you attending today will already know Nathan, who has shared his insights with us at previous SAM events. Nathan is Head of Product, Emerging Services at Cuscal and has more than 20 years in leadership roles in the banking and payments industry. Nathan has led Cuscal's involvement in NPP and we look forward to his update today. So first off, I'd like to hand over to Ben.
Thanks, Leanne. Look, it's an absolute pleasure to be here with you all today as part of the great relationship between SAM, Cuscal and the SAM membership, many of whom are Cuscal clients. And look, it's just a pleasure to be here. I really want to thank everyone who's attended today for taking the time to dial in. I think once upon a time, mid-December used to be a time when things were quietening down, but I don't think I've spoken to a single person who said anything other than things are really busy at the moment, they're tired and really looking forward to the break. So thank you for attending. And I think equally much as we would love to sort of do these face-to-face, it's great to be able to do these as webinars. But equally looking forward to a point in time in the future where hopefully we'll be able to continue these engagements in a face-to-face environment. Just to continue the introduction for myself, I am a new face here at Cuscal. So I joined only a couple of months ago as the new head of client services with responsibility for client relations and account management, marketing and communications, the contact center and client experience. And the mandate I've been given is pretty simple. Firstly, it is to deepen and strengthen the already strong relationships we have with our clients to ensure that we continue to be a trusted advisor. And secondly, to make sure that if there are any areas of friction or obstacles that are getting in the way of us delivering against our aspiration of client excellence, that we do so. My background, as Leanne sort of alluded, is a little bit interesting. I don't really come from a payments or financial services background. I do join Cuscal from a couple of years at Fiserv, but most of my background has been in mainstream IT, including 15 years at HP, where I held a variety of senior roles in operations, in service delivery, in product, and in sales and marketing. And interestingly, in my time there, I was involved in a number of transformations in the organisation, mergers and acquisitions, separations, as HP reinvented itself and adapted to its changing world to continue to be a driving force into the future. I left IT for payments because I think it's incredibly exciting. We are seeing, and we will see a huge amount of innovation and change at what I think will be an accelerating rate. And while I don't think any of us would be so bold as to say we know what the world will look like in 5 years, I think we'd all agree whatever it does look like, it's certainly not going to look like what it does today. And I find that incredibly exciting. So having decided to leave IT for payments, I'm thrilled to be at Cuscal. I'm really thrilled and excited to be right in the center of this wave of innovation, both in terms of the internal transformation that is occurring at the moment at Cuscal, as we undertake a journey to ensure that we remain at the forefront of enabling payments into the future, as well as the products and services and solutions we bring to market. One of those, of course, is the NPP, and that's what we're here to talk to you about today. And in a moment, I will hand you over to Nathan Churchward, Cuscal's Head of Emerging Products. Nathan is someone who is most certainly not new to the payments industry, and I know he's a very familiar face here at SAM. You know, I think it's probably fair to say that we're really passionate about the NPP here at Cuscal. We're a founding shareholder of the NPPA, and we've played a major part in shaping the strategy, the direction, and the ongoing developments of the platform since the beginning. Craig Kennedy, our managing director, is a board member of the NPPA and has been since inception. And Cuscal has representation on all the NPP committees and working groups to ensure that our client voice is heard and reflected on all the programs. We've been with the platform since day one, enabling over 50% of brands on day one back in February 2018. And our strength and relevance, I guess, in that program has continued ever since. We currently enable over half of the identified institutions on the platform, including all the payment service providers that are live today. We process and settle around 20% of all the NPP payments that pass through the platform every day. And we continue to board and support new clients at a steady, continued rate. We've got a strong pipeline, including mutuals, payment service providers, and enterprise organisations who are choosing and continue to choose to partner with Cuscal. Before I hand you over to Nathan, who is going to provide an update on NPP and the roadmap, including PayTo, just a reminder on that housekeeping item. Your feedback at these events is really important, so please do take a moment at the end of the session today to fill in the survey. Your feedback really helps inform the topics and speakers for further sessions. On that note, I'll now hand you over to Nathan.
Great, thank you very much, Ben, and great to be back with everybody. And I can see many familiar names, but it's been a while since I've had the opportunity to talk to the SAM network, and so good to have some content that is both topical, relevant, and important to both the future of payments, but also the future of the mutual sector. So, as you can see, we actually definitely do see that NPP and PayTo is part of the future of payments, and perhaps not all of you are payments nerds like I am, but I'm starting to see lots of commentary globally around account-to-account payments and the growing importance and significance of them, especially as they start being able to be integrated into customer experiences and merchant experiences. When in the past that has not been the case. It's been very much just a push payment from a bank account. So we'll talk today about some of those use cases and why the growth is going to be so important over the next few years. But first, let's have a look at some of the stats around current payments. As Ben said, there's a growing number of financial institutions, but also non-bank financial institutions that are part of the NPP ecosystem. And this 105 is just the providers of services that have customers that they're connecting. Beyond that, many of those organisations, I know certainly out of the payment service providers that Cuscal provides services to, many of their customers are also fintechs and others, and those fintechs then have clients as well. So if we looked at the total ecosystem of organisations that are using NPP to provide real-time payment experiences to their customers, we're probably looking at double that number again. What we're really proud of is that Cuscal effectively identified the opportunity for payment service providers to operate as identified institutions. And we're now seeing a growing number of those creating capabilities. That has really played out in the PayID environment, and in fact, there's a 9 million was the threshold that was passed last week. So these numbers are the ones that are the latest officially released, but 9 million went out as an announcement from NPPA in their LinkedIn channel the end of November. Out of those 9 million, 20% are actually created by Cuscal's payment service providers to give their fintechs and platforms a experience similar to BPay but in a real-time nature. The reason that's important is that we're seeing this demand from PSPs to start leveraging real-time payments, and that's why we believe that PayTo will be rapidly and strongly embraced by this part of the market to roll out innovative solutions and help to drive the uptake of the real-time payment initiation from those third-party platforms. So it supports the investment that the banking industry is making in providing capability to your members and to your customers, because we know that there are going to be a range of innovative solutions, because we're already seeing those in the payments and PayID space. So 2.8 million average payments per day, and continuing to grow strongly. In fact, we saw from our own volumes last month that our volumes grew 5% in November from what we'd seen in October, and that type of month-on-month growth is not is quite common. Going forward, across the industry, I'll talk a bit more about what the forecasts for future growth are on later slides. And as Ben highlighted, there's a big share of payments, and what's really interesting is that now it's almost a third of all account-to-account credit payments are carried across NPP. So there are activities that I'll talk about this morning on what's continuing to drive the substitution of other payments from direct entry. But what we've seen is that the direct entry volumes have also been maintained. So what we know is that there is still an overall growth in transaction volumes in the market of as people substitute cash, as people substitute other means of payment for an account-to-account transaction. I was talking to a group of new starters yesterday and asked them how many of them had started to shift their behaviour from settling up with their friends at the end of a shared meal into using their PayID and their banking app to settle up rather than cash, and right around the room. And this was people from all different ages, and not just payment nerds. They may work for a payments bank, but some of them were quite new to the payment space, and we're really absorbing what is a common use of people's PayID and their mobile banking apps as everyday tools. So thinking about that use, I thought I'd share some interesting statistics that we see in the Cuscal volume. I guess when you've got over 50 financial institutions that are using your service, and we're processing 20% of all NPP payments, it means that the numbers that we're able to show give us some really good insights into the overall usage. And we do see some differences in the way that smaller institutions, and I thought for this audience that it would be good to give you an insight into what perhaps you and your peers' activity might look like. And often we are asked, well, what's the difference between a larger institution and a smaller institution? And as you can see, in some areas there definitely are differences, and in others it's actually relatively similar. So payments made and received using a PayID. So you've put lots of effort into implementing those solutions for your members and your customers, and we're now seeing that across the board. With the larger institutions, there definitely is a really strong take-up of people that make and receive. One thing that's interesting, and perhaps this is around the demographics of members that work with industry aligned or regional community-based credit unions and mutual banks, there is actually a difference in the people that are making PayID payments to others and those that are receiving. So I guess the opportunity there is that through promotion or through the way that you would I guess support your members in understanding the services that you've made available to them, a smaller number of your members are providing their PayID to other people or have created a PayID than the general banking population. If we look at then the customers that are making payments and the customers that are receiving, as opposed to just the total payments, there is a little bit of a difference there as well. So what that tells me is that once a customer does start to use their PayID, they actually use it quite a lot, and that's been also reinforced by some of the research that NPPA have done. So I would encourage you that if you are going to look to promote the use of PayID, there is actually going to be a payback for you, because once a customer starts to use it, they realize how valuable and important that is, and it does drive their engagement. Generally, though, the people that are using it, the average transaction value is around $200. So that's actually probably higher than what I would have thought, considering we see a lot of growth that has come out of people doing person-to-person payments and settling up those shared transactions. So it's interesting to see that there would actually be a number of quite large transactions, and I wasn't able to get a distribution of how many of the transactions were very small compared to very large, but this does give you an indication. But when you do look at the difference between the average value of an NPP payment and the average value of an NPP payment with a PayID, you can definitely see that PayID is supported and used by customers that are doing those smaller person-to-person payments, or paying bills, paying tradies and others. So that becomes then that they're using that for their everyday purchases and cash substitution. Now, I was going to offer answering questions on the way through, but I've just realized that I can't see when questions come up. So I will just keep on going through and come back to the end. But I know that this is the type of information that often does raise questions. So if you throw them up on the way through, I'll make sure we've got time at the end to answer them. So looking at the NPP roadmap, I talked about the fact that there are volumes that are driving through the network. There are actions to look at how do we go beyond the 30% substitution, because when NPP was put in place, the objective was this was eventually going to be the replacement for direct entry. So we've now seen that through substituting individually initiated payments, so the ones, I suppose the ones that we may have called Pay Anyone in the past, that's resulted in a 30% substitution of direct entry, which is actually higher than what we had anticipated that type of substitution would come from. I remember when we did our original business case and did some initial assessments, we thought that that person-to-person individual transaction substitution might count for about 20%. So definitely the change in the market away from cash, the change in the market to people actually really embracing PayID-based payments has created an overall uplift in the growth of volume. What will follow is that it may not come this month now. There was it was hopefully going to come out in December, but AusPayNet's position paper on the future of BECS, and generally what's probably going to be put out for consultation is, would we look at a 5-year plan to start looking at the closure of BECS. And as part of that, the NPP participants have all committed to uplift our system capacity to ensure that we can support a 50% share of all of the credit transactions by December 2023. So that's quite a significant growth rate over the next 2 years to more than double the current volume. So if we think that the current volumes are accounting for 30%, if we're going to actually increase to 50%, that will be a significant increase. And so Cuscal is committed to that volume, and the rest of them too. The reason that that is actually quite significant as well is that we also need to support the peaks and troughs, and we know that even in direct entry, because of the way that payments are then rolled into ensuring people have funds on a Thursday before Easter, for example, that we can't process transactions. And Wednesdays and Thursdays will often get paid on Wednesday. Is that the peaks we have to support a 4 to 5 times burst of the average. So there is actually going to be quite a significant amount of capacity to be built into the network over the next 2 years. We may see, though, that those volumes will flatten out as consumer behaviour and business behaviour starts to change, and that payments then would still get processed on public holidays, considering it's a 24/7, 365 system. The communication that we'll have with our clients and that ASL and Inju will have with you, with your using them over the next 2 years, will start to indicate when increased volume is expected. So while most of that work around volume driver will come from the major payroll platforms and some of the major institutional customers, because 70% of all of the current direct entry credits come from corporate banking channels and direct links. They don't come from small business. That is the big volume, and that's why we actually do think that this is quite realistic, because if you have even just a small number of those big processors start to process their direct entry by NPP because they decide that they like the certainty of payment, that it's processed exactly at the time that it's expected, and not having the peaks and troughs of DE, that we will actually see some significant move. There are some potential shifts in strategy for at least 2 of the major banks that are looking at optimizing some of their business customer processing in the same way that their individual pay anyone transactions are optimized to NPP over the next 12 to 18 months. So that will be something that will continue to be information that comes out to you to know when to expect, and also, I guess, to forecast for your own budgets the shift in cost from direct entry to NPP. The other elements then beyond that will drive that increased volume, and is where new capability comes from, is PayTo, and I'll dive into that in more detail shortly. But I would like to also address the next new piece of functionality and capability that's been announced and is targeting for a compliance date of April 2023, is to support the settlement transaction of international payments. So at the moment, when one of your members receives a payment that is originated overseas, you're probably receiving that as a RTGS payment, or if it's coming through one of the private remittance platforms like TransferWise or Western Union, they're probably using direct entry. So from April 2023, it will actually be a requirement that NPP is able to be used as a settlement transaction as well. And what will be required of you as the receiving FI for that is that you would have the ability to do the same type of screening that you would do for other IFTs, and the same reporting that if that came in as an NPP payment. So that will be potentially not highly technical, but it does become operational. You need to look at your current IFTI and AML policies and ensure that your NPP transactions are able to work with those same policies for reporting to AUSTRAC. So PayTo, definitely part of the alignment to digital payments. So it's beyond just being a real-time, but we're adding digital to the way that we're describing it because of the way that it's integrated into third-party channels, and it becomes very much part of a payment experience, not just a payment service. So one of the I guess concepts that I've started to talk about with my team and with people within Cuscal, and you'll start to, I think, see that play out with some of the new forms of regulation, is that you've got 3 layers of the way that payments work. You've got the payment systems, which are highly regulated, very much focused on the funding of the transaction, and that's where most of the current regulation falls. You've got payment services that then create capability that helps to use those. And if you look at solutions like Apple Pay, effectively that's a payment service that sits on top of a payment system and helps to orchestrate the way that the payments happen. But even more, and going forward, we've got these payment experiences, which are very much around the customer experience and the way that customers are able to have payments embedded into other services. And why PayTo is going to be valuable is that it actually has capability that can deliver opportunities at all 3 layers. At the payment system, it's using NPP existing payments. At the payment service, it's got APIs to enable to be embedded into third-party payment systems, which is why that there is development to have that authorization process that can enable that to be authorized and secure. But then very much around the payment experience, we'll talk about the use cases where I think that that's going to start to drive capability, opportunity, and value for your members, that they'll get more value out of their transaction account with you. So I guess the really obvious and probably the type of use cases that we'll see rolling out first are around subscription and billing. So these are services that currently might be serviced by direct debit. So we know for telcos and utility companies, they've been really pushing direct debit over the last few years because it's lower cost. But it does come with a number of challenges. It is it's not real time. It doesn't have some of the same certainty of outcome that a card-based payment has. So while they may have reduced some of their transaction processing cost, it does come with operational overheads. The value of PayTo is that you get the ability to have an account-based payment, but without the lack of integration, without the lack of real-time notification that come from BPay and direct debit transactions. So we've seen, for example, that Telstra has recently withdrawn BPay payments as an option to pay for prepaid and for some of their other plans. They're moving towards, they want all of their customers to have more of a subscription-oriented relationship with them rather than a build relationship. So we're going to see the lines of subscription and billing blur, and that will become really important because even those billing scenarios will actually be managed more like a subscription, where it is just an automated transaction. And for that, it does need to have a lot more certainty. It needs to be automated in the way that it is processed. And while the value of PayTo is that it's as it says in the name, it's a payment to, not a payment from. So it ensures that your transaction account is actually at the heart of that service, and the instruction that is received ensures that the payment is made to that biller, as opposed to that biller debiting your customer account. So it actually puts more control in the hands of the customer, but with visibility and trust with that biller. So we do think that that's going to be a well received. And if we look at the opportunities and some of the initial payment initiators that are signing up to PayTo, they are those subscription-based platforms. So we're seeing a number of the big direct debit aggregators are getting onto PayTo. So that's why I've got subscription as the first use case. But we've also seen interest from utilities and telcos, because they can see the benefit of having the integrated account-to-account process, but with more certainty than direct debit. E-commerce, what we are seeing interest coming out of e-commerce, and I think that will be the second wave. There is a little bit of hesitancy from those e-commerce providers about the customer experience. So if we think about the way that PayTo works, you first of all have to authorize the PayTo agreement, and then after that, it can actually be made seamless. A lot of these e-commerce platforms, they use the term keeping you on platform, so they don't want to lose that customer engagement. But as more and more of these solutions are based on driving repeat business, looking at return customers, setting up a customer account, I don't think that once people see how PayTo actually rolls out, that they will be quite as concerned, because they'll be able to make part of setting up the PayTo agreement, and the authorization that then comes back to you to be authorized in your mobile app becomes part of that account setup, and then they have the ongoing seamless, frictionless experience that they're looking for from that purchasing experience. We're seeing that everybody wants to have that Uber style embedded capability that at the end of the action, whatever the action is, whether it's taking a ride in a car or being in a store and clicking on checkout, that becomes a seamless experience. And we see that this e-commerce will actually be much broader than just online. It will actually also look at some of those embedded capabilities. In fact, this also is what would support QR codes. So we often get asked, well, what about QR codes? Where do they fit into the mix? What about retail experiences? So effectively, it's the application that any retail experience or even QR experience really is ultimately e-commerce. That behind a QR code, the QR code is not actually the payment. The QR code is that experience layer that sits above the payment service, and then that payment service taps into the payment system to affect the transaction. So when you scan the QR code, that calls up in the merchant's app or the wallet app, and if you've got a PayTo agreement signed up as the funding mechanism of that action, then that will trigger the payment to flow. The other one that we've been talking about and we've been seeing interest in is one that a few people scratch their head when they say, but PayTo's about sending money from an account. Why are you talking about payouts? Effectively, payouts could be a payroll, could be accounts payable or any other disbursement. And you recall back, I talked about that payroll and all of these credit transfers are the bulk of what's currently sitting in DE. And one of the reasons that that's still sort of indirect entry is that if you've got a payroll system, even one that's in the cloud, it's actually really hard to integrate the payment of that payroll into the cloud-based payroll system, because it still needs to then have the transaction funded from the business's bank account. So what we're seeing interest from some of our PSP clients and also accounting and other platform providers is that now if you can process the payout from the platform and get funded using PayTo in real time, and know that that transaction to fund, you might be paying 100 staff, and then you've got one transaction that comes out of your bank account, and that might be at Westpac, and that then the payroll is being dispersed from your zero environment. That means that PayTo does actually then start to drive the ability for these payout services to be integrated into those platforms, and that's also going to start shifting. While it creates one PayTo transaction, it actually creates potentially hundreds of NPP payments that are then being dispersed once the PayTo transaction has been processed. And then the other one is around, well, hearing CDR, the next phase of CDR is action initiation, which includes payment initiation. So we're doing all of this, and then we're going to have to do it again for CDR. And our perspective and what's playing out at the industry working groups that we're part of is that this will be an overlay, and that CDR payment initiation will be operating at that experience layer, and in some respects at the payment service layer, but will still tap into the underlying payment systems. So, for example, I've talked about the issue that some of those e-commerce providers say, well, it's really challenging to have to lose the customer off the platform. We like the way that CDR works, or we like the way that 3D Secure works, where it stays within our environment but has a call out to the bank for authorization. Where we think that this will play out is that the capability that delivers that type of front-end integration is what will come through CDR. That will then send a message through to the PayTo infrastructure to have that authorization. There's provisions in the rules for PayTo that a bank can delegate their ability to authorize payments to another process. And so that sets us up to say that the CDR consent process can be that process that you trust, that the customer has provided the authorization for the PayTo agreement, because you've got that notification from CDR that that's happened. And that will leverage the action initiation obligations that you'll have to implement as the next future phase of CDR, and hopefully you won't be having to do lots of different things. They'll all actually start to intersect with each other. I've talked about some of the benefits as I've gone through, rather than just talking about here, but I thought it was worthwhile keeping this slide, because I think this is information that will be good for you to be able to share with some of your teams. And then throughout the first half of next year, we'll be providing the Cuscal clients with the information that you can share with your members. And some of these benefits are benefits to the payer, so your member. Some of them are benefits to billers and organisations that are looking to receive that PayTo payment. But we've talked about the fact that a lot of it is all validated, it's all in real time. So you get the same types of experiences as cards, but one of the things, it doesn't have some of the same security challenges, because every payment is made from an account rather than pulled from an account, which means you've got the ability to have more control. So unlike a card transaction where the card number may be compromised and used in a third party environment, because there is an upfront authorization of PayTo, you're actually putting that extra level of protection in front. In some respects, it's a bit like 3D Secure in that manner, that it adds that level of customer authentication. The availability of funds. We've seen statistics that in some cases, billers report up to 25% of their direct debits being dishonoured. That's actually a pretty scary number, and a lot of that comes from retries as well. But they'll get a direct debit dishonoured, and they'll do a retry the next day. So you've actually got this snowballing effect. But the most important thing is the reconciliation and management, because it is actually a centralised authority. It means that there is the ability to have a control put in place that it can be modified by the customer, either with their biller or with you, and then the message goes to the other party to make sure that everyone knows when the change has been made, or when a payment is declined, and that'll be the difference. It'll be a decline rather than a dishonour. So how will it work? You've got, depending on your customer base, we see that our clients have up to 40% of their direct entry are direct debit transactions. So that's quite a lot of your members are already using direct debit. So we see that 1 in 4 companies in a RFI research study reported that dishonours of direct debits was a challenge for them. And that's especially a problem when you look at the next statistic, that it takes up to 4 days for them to actually know that the payment has been dishonoured. So for PayTo, the attraction for billers is that they know immediately, because they get a decline, not a dishonour. And part of the challenge is that uncertainty then makes consumers wary of direct debit as well, that they don't like the frustration of not knowing when it's going to come out. So it depends on a time of day it's processed. It depends on whether it's if it's due on the 15th of every month, it might be processed on a different day. And also the fact that it's often an amount that's greater than what they expect, which could then take them into an overdrawn situation. And I know that some of our clients, and in fact most banks and credit unions, would have a return payment fee. So not only do they have the payment that they've missed with their biller, but they then actually have to pay a fee to have that dishonoured. So that's a cost that a number of people find very frustrating. They'd much rather have the payment be rejected up front and not have that fee. And also that while this is not necessarily an issue for PayTo, but potentially it could drive some use towards PayTo, because if you have a card-based payment and the expiry date needs to be updated for a card on file, it means that there is actually a process. But for PayTo, because it doesn't have that exposed details that can be used in a whole range of scenarios, it is actually more of a closed loop solution that will have that certainty. And the other one that I would ask you to perhaps check with your compliance managers around the ability for you to act on a member who wants to have a direct debit authority cancelled. So many financial institutions have not been able to demonstrate good processes to be able to cancel that. And part of that is that you could, even if you had a good process, sending that to a biller to them to cancel their direct debit process often doesn't happen. So again, big benefit of PayTo is that because it's got that centralized control, and it can be then paused or cancelled by any of the parties, and the rest of the parties to that agreement will be notified, so they can then take action proactively. And this is where that process comes into play, that when people would choose pay by their bank account, this starts to look quite similar and can be embedded into those user experiences that I talked about, that are similar to the way that those highly engaging, very embedded Uberization of customer experience meets payment starts to happen. So customer can choose to enter their pay ID or their BSB in their account number. There then will be that validation to see whether that account is able to support PayTo. So we know that there will be a ramp up over a period of time of banks coming onto PayTo. So day one, there won't be 100% coverage. There will need to be that validation as to whether that NPP reachable account is also PayTo reachable. We know that there will be certain account types that can't accept a PayTo, and that will also then be validated at that time. The authentication then comes through to you as the account servicer to the customer, and you get the authorization, which then sends back the authorization to the initiator that confirms that they can now start to initiate payments on that customer's account because they pre-authorized that experience. So if we think about what's next, we've got 6 months before go live. There's still a lot of work to do. There's work to do from participants like Cuscal to complete our build. We're really pleased that we've now completed the build of our core systems. We're finalising some of the supporting systems that sit around the outside of that, like the fraud management service. Our UAT environment is now live, and in fact, UltraData is the first connector to be connected to our UAT environment. So they're working through their timelines to manage as much as possible to be on time. I think that those of you that would have received some notification from your service providers as to what their timing and challenges are, and we know that there are a number of challenges for a range of UltraData and data action implementations. We're working very closely with them to mitigate those, and making sure that as much as possible that everything is as close as possible to that compliance date. Again, we'll work individually with each client and with data action and UltraData to ensure that we close as much as possible any gap between the compliance date and individual go lives. So between now and then, will be growing awareness and messaging. So payto.com.au is the central site where those assets that are available for you to either point. At the moment, I'd say probably the best thing is to point your staff to and to use for some internal awareness. There are videos, there are fact sheets that are available for that. And one of the things that we'll do with our clients over the first quarter of 2022 is work on how collaborate with you on how best to use those, and add the additional tools around training of the changes that will happen to the various Cuscal systems. So we're really pleased that we will enable our clients to be part of the first wave, and to ensure that they are meeting all of the compliance obligations together with Cuscal. We're also, though, working with those payment initiators, and part of that is ensuring that there are actually going to be transactions and PayTo agreements for your members to be responding to when PayTo goes live. As I said, we're really excited by the response that we're getting from the market, especially some of those direct debit aggregators that have existing volume that they will look to optimize, and the interesting platforms that are seeing some really great use cases for how they will roll out new experiences around payment initiation, around some of those payout management capabilities. The other opportunities that perhaps you might want to start thinking about, and potentially your digital channel provider, and this might be something that Data Action could look at as more of a group solution, or Ultradata would build into their roadmaps, is when you open a new account, a use case that we've started to talk about to some clients is that they would then have a pay-to agreement as part of their account opening process. Remember, I talked about e-commerce platforms having a pay-to agreement as part of their account opening process. Well, if you're doing online account opening, perhaps you will also consider having that, and therefore that initial funding of the account when it's opened, whether that be a term deposit or a transaction account, could actually then be funded from the customer's existing account elsewhere. And again, just like those e-commerce providers, you start to stay more in control and managing the experience of becoming a new member of your credit union or mutual bank. But again, that's something that would be in conjunction with the way you do your account origination. So I trust that that's given you a whole broader perspective on some of the opportunities of PayTo. Definitely there are challenges, and I hopefully have just touched on how we're working to mitigate some of those, and then how that links in with the overall future of payment strategy, of which NPPA, I guess Australian Payments Plus now, and AusPayNet are collaborating on, and also then together with Treasury around CDR to start bringing all of these concepts together and getting a more digital, a more integrated, and a future-proofed payment system.
Okay. Well, thank you, Nathan and Ben. We appreciate the insights you've given us today. So it's been really interesting to see the growth in NPP transactions and how some of the major services are being migrated to the platform. So we've got some time for questions, and I notice we do have some questions here, so I'll go ahead. First of all, what is the impact on NPP of the consolidation with EFTPOS and BPay?
So the initial focus of Australian Payments Plus, which is the consolidated entity, will be on delivery of some of the prescribed services. So each of the EFTPOS, NPPA and BPay all had to confirm that their roadmaps would not be impacted, and therefore there was not going to be a dilution of capability. So I think that we'll see that for probably the first year or more. So for NPPA, their focus is the delivery of PayTo, where we might start to see some integration is around QR codes, because each of those parties had a QR strategy, and doesn't really make sense to have competing QR capabilities. So that would be another area of focus to get some advantages out of the consolidation.
Okay. So you mentioned Cuscal operates around 20% of all pay IDs. Do you have stats on the approximate proportion of that are linked to accounts held by cryptocurrency brokers?
So there is actually quite a large share of, I guess I don't want to have a guess, but I know that they are actually a big user of that 20%.
Okay. And so what will happen if our core banking system provider is not ready on time?
So there is a little bit of wiggle room because July and August 2022 are effectively the launch period. So we're working with Ultradata, for example, to sequence some of the rollouts, because their forecast is that it's going to be very challenging, if not impossible, to have everybody live by June. So we're looking at more of a 3-month period, and I think we've given some indication of that extension impact to our clients. We're quite confident that we can avoid any compliance impacts. It more becomes a logistics challenge now.
Okay. And so accepting DE payments continue to account for the majority of payments at present. The logical endpoint is for NPP to replace DE altogether. Can you share any insights on what would be required for that to become a realistic possibility, and when you think that might begin to occur in practice?
Yep. So we do think we'll start to see that from next year, as some of the major initiators of payments look to integrate NPP into their platforms. We know that one of the big cloud-based payroll providers is integrating NPP at the moment, and we also know that some of the cloud-based small business systems are also rolling out NPP integration. The ultimate change, though, would be that optimization of the way that a bank would accept a file-based solution from a customer, and in the same way at the moment when you go into a mobile banking app and it sends it by NPP if that account is reachable, that's what would be required by primarily the major banks to I guess mop up those transactions that are not initiated directly from the payroll system to the ones that still send a file to then say we're going to send that via NPP. We've actually seen that ANZ has been trialling some of that already, so we do see some unattended payments come through from ANZ. So we know that there is an appetite for some of the majors to start looking at how they would optimize their processing and get that real-time and I guess get guaranteed outcome, because rejected transactions are as much an issue for banks as they are for customers.
Okay, we might have time just for one more. So the possibilities with PayTo are clearly extensive and quite exciting, but there are concerns around the complexity and costs involved, particularly for smaller ADIs. Are you able to offer any reassurances in those areas?
Okay, I suppose I'm not sure whether that question is coming from someone that's already working on PayTo or is not. So I think that based on the way that we're working with Data Action and Ultradata, the Cuscal clients should be quite clear on what is required and the build that is being implemented. What Cuscal has also done is we've actually put in a lot of that payment service layer rather than just the payment system layer, so that Ultradata and Data Action are calling APIs rather than having to build all of the systems. So I guess if the person that asked that question is not a Cuscal client, I'm happy to have an offline conversation. But from a Cuscal perspective, if you were a Cuscal client, also send me a message, because that might be something we need to help address if that's not coming through clearly.
Thanks for that. I think we do have another question, but we've run out of time. So we might get that question offline, answered offline. You can send it out. Yeah. So I'd like to thank Nathan and Ben for the presentation today, and to Cuscal for making these webinars possible. I'd also like to thank everybody who joined us today. So we do appreciate your feedback. So please take the moment to complete the survey, and we'll email you a link after we finish today. So thanks again for joining us, and we look forward to having more webinars in the new year. So goodbye, everyone.
Thanks, Leanne. Thanks everyone for joining.
Bye.